Okay, welcome back. So we've got the market, which is up 16 now, just 16 points, and there is a fair bit of pressure from the high point of the day. I mean, what, 100 points higher at in the morning, and then from there to come off like this, quite a bit. 10,710 was the high. Yeah, so we are off 100 plus points from those levels. There is news on S. Chand and Company. Stocks absolutely flat. The timeline of the first tranche of investment of about 60 odd crores in Chetna Publications has been extended. So there is some news flow on a transaction coming through. Manisha is here with a roundup of all that is happening in the world of commodities. Manisha, morning. What are we focusing on today?
Thank you so much for that, Prashant. We're looking at the gold prices because it marks festivals, and you have seen the gold prices in the Indian markets trade at a premium. One, because there is festival and wedding demand, and the other, it's also because of the rupee depreciation. So if the international markets have seen nearly 6% of a decline in gold prices in this year, the Indian markets are just about 2% down. We have seen a 3-month highs in the global markets as well. There have been global trade concerns, speculative buying, geopolitical tensions, and of course the US dollar also had gone weak, and that led to some buying. But the pressure that you are seeing in today, of course, comes in because of the strength in US dollar. That seems to have gained some ground, and that seems to be weighing onto the gold prices as well. But David Mitchell now joins us to talk more about that space. David, hi, always a pleasure to have you. What is your sense? We are finally above 1200 and holding well on the charts. Of course, we haven't been able to make a very strong breakthrough since those levels. How have you seen the prices?
Good afternoon. We're facing a number of trade winds against the gold price at the moment. Obviously, the US dollar, which is people have to understand that we're driven more from the carry trade, the global borrowing of US dollars since the global financial crisis. Sorry.
Sure.
Since the global financial crisis of 2007-2009, this is obviously the move lower in US dollar interest rates and the soft stance of the US dollar to get the globe out of the global crisis has driven a huge carry trade globally. Now, if you look at the BIS, they're estimating it closer to $20 trillion globally. So the US dollar is headed higher over the next 18 months.
Okay.
So but with that, against that, we've obviously got COT structure of gold at the moment. The banks are long gold for the first time in 17 years. The other metals are extremely bullish, considering the fact we're seeing peak gold, peak silver production, and production costs, especially in the minor metals, are extremely dynamic for a higher price. So there is a number of different tailwinds that are affecting the gold price at the moment.
Clearly. And you know, we have seen the gold prices underperform for until now in 2018, with just a couple of months to go before 2018 ends. Do you see accumulation now coming in? Would you advise buying into this, even if it was for portfolio diversification?
I mean, obviously the central banks are buying a great deal amount of gold. I mean, since 2010, the global central banks have been an incredible amount of gold, and you've just seen the Hungarian central bank announce that they've increased their gold holdings dramatically by 10 times their holdings. The last time we saw global central banks diversifying into gold was in the 1960s to this extent. And obviously that was followed by the 1970s. As far as high net worth individuals are concerned, we're seeing a great many of them now looking into gold, purely because the macroeconomic picture globally is deteriorating quite rapidly. And this is driven obviously by the global debt crisis.
Absolutely. But, you know, David, with the view that the US dollar will continue to strengthen for the next 18 months, as well as you said, would you say that that would continue to put pressure on many commodities, including gold then? Well,
there are several ways to look at it. If you look at the financial assets, the paper financial assets against the commodity sector is very much looking at a major cycle low. You've got the repercussions of the Saudi situation and energy, probably, and the oil price being pushed higher. You've obviously got the other metals that have seen quite dramatic moves. I mean, the rare earth metals, the strategic metals have moved very dramatically.
Yes, it has been very, very volatile, yes. But David, what is your sense then? Where do you see the gold and the silver prices head from here on then?
I'm very much a cycles guy, and I analyse the macroeconomic picture. As of now, I'm advising clients to slowly start accumulating the metals.
Okay.
We will see quite a dramatic revaluation over the next 3 to 5 years. And over the next 12 months, I would use any dip in gold. But you've got to remember, if the gold price looks cheap against the US dollar, it's because the US dollar is rising on the foreign exchange market. So in various other currencies like the euro, like sterling, like the Indian rupee, the Chinese renminbi, gold actually is looking quite attractive.
It is.
So as far as a long-term strategy is concerned, we are accumulating metals. There will be a revaluation driven by COT structures, cost of production, peak gold production, peak silver production, cost of production, global demand for portfolio diversification. It is turning into a perfect storm, backed up by the global macroeconomic picture.
Oh, well, absolutely. Thank you, David, so much for joining us, and thank you for that view as well. So next 12 months, buy on all dips for gold is the view coming in from David Mitchell there.
Okay, all right, Manisha, thanks very much for that. So that's the update coming in on the commodity space. Well, there is some amount of nervousness definitely in the market, but the Nifty is managing to hold 10,600 as we speak. And it is definitely the financials which are under pressure. But the Bank Nifty is managing to hold its head above the water at this point in time, just about higher by around 0.17%. We'll do one thing, we'll take a break, but up next we'll be discussing market technicals. Ashwini Gujral will be with us to tell us what he's strategizing.